Welcome to Bears in Exile. Today is Monday, June the 4th, and this is the market overview, looking at the Dow, SPX, VIX, TNA, UUP, FXE, GLD, SLV, XOY, XLF. Unbelievable. Okay, and all those other things that we look at each night, now that my chain of thought is broken. So, anyways, going on to the Dow, like we do every night. It wasn't a bad day. It wasn't a great day. It was a day. We noted on Friday we were way outside the lower Bollinger Band. We need to go up or to the right. Get back inside of it. We did go to the right. It was not quite enough to get back inside the lower Bollinger Band. But it's a heck of a lot better than it dropping again and pushing the lower Bollinger Band down. Now, it's interesting because we have the 200-day moving average. You have all the doom and gloomers. Oh, you break the 200-day moving average and the world comes to an end. Well, that could be the case. Absolutely. We could fall off the map here. But when you break this, you also need to have a big, solid candle to confirm. And we don't have that yet. And normally, especially with a level like this, you have to go back for a retest. Doesn't mean that we're outside of it one day and we go back for a retest. But regardless, no matter what happens over the next couple of days, we should have a retest in the not-too-distant future. And that's more than 100 points from where it is now. So that's nice. So, ending with a small hammer. And to be completely honest, the daily does not look wonderful. CCI down, stochastics down, 14-day RSI moving average down, RSI up, MACD histogram down, MACD down. Indicator-wise, looks poor. Yeah, we have the RSI ticking up slightly. We have positive divergence in the daily time frame. That's nice. It'll be nice when it does something with itself. But beyond that, and we're below the newly formed lower price consensus level for the month. But beyond that, I actually like this chart. And not because it's ugly. Certainly there's the potential for it to stop here. That'd be really nice. Not that we have a great indication that it's going to stop here. We do need to get back inside the lower Bollinger Band, and we'll see if that happens tomorrow. But if we roll on over to the 60-minute time frame, we had the opening drop. Looked terrible. But we noticed all day long, you listen to this in the daily running thread, that the dollar was weakened pretty darn good, and the market did not reflect it. And eventually, it mattered. The market came up, it went sideways, and did not close at the lows of the day. Unfortunately, also did not close at the highs of the day either. But still, 60-minute time frame, we have some recovery. And look at our indicators. We have the 14-day RSI moving average curling up, finally. This is the first time it's done this in a very long while. We have the stochastics. Yeah, they're mixed. The fast turning over at the end of the day. But still, not a bad position to be in. We have the CCI ticking up. We have the RSI ticking up. We have the histogram sloping up. We have the MACD with a bullish cross pointing up. And yeah, and we have a positive divergence that we need to work off. That should take us at least to the 12,200 if this is going to work off properly. I know that's kind of hard to believe as bearish as everything is, but that's what I see. And the 60-minute time frame is very encouraging. Oh, that was the 30-minute. Duh. Well, look how nice the 30-minute is. And here we are with the 60-minute. 60-minute, a little underdeveloped compared to the 30, of course. But we have the 14-day leveling out. We have the stochastics on their way up, the CCI on the way up, RSI on the way up, the histogram sloping up, and the MACD going for a bullish cross. 60-minute time frame looks very, very encouraging. It's what I meant to show, and hey, 30-minute doesn't look bad. 60-minute certainly does not look bad at all, and that's not bad. I mean, if we can have follow through in the intraday time period, the daily will shift, and then we'll have something real to work out with. And even here with the 128-minute, this sloping up of the MACD histogram, the MACD itself losing momentum, trying to turn. CCI down, stochastics up, 14-day RSI moving average down, CCI up, RSI down. Ugh, why do I tongue twist myself? Anyways, point being, even the 120-minute time frame does not look really bad. So, here with the small hammer, knowing that we need to have a retest of the 200-day moving average, the possible likelihood that we are going to go for 12,200, which would be essentially, well, that'd be right here. Hey, I'll take whatever I can get. But anyways, point being, it's not the end of the world, and certainly there is some opportunities for a bounce here. Of course, there's been opportunities for a bounce all this time. Anyways, I guess I should just move on. Okay, SPX, ending with a little doji star. Nobody really to speak of. And very similar to the Dow, the secondaries don't look very good at all, except for the RSI ticking up slightly. We don't have confirmation of a big candle below the 200. This 60-minute time frame, just like the Dow, does not look bad whatsoever. We have everything moving up, trying to get a bullish cross. 14-day trying to turn. This does not look bad in the 60-minute time frame at all. I would love to see 1320. I think that an attempt at that would be very likely, and I'm actually thinking that 1340 would be a good spot for it to actually run into some problems, with about the 1360 area most likely being a problem area, a big problem area. But anyway, that's a long ways away, and we shall see. 80-point run on SPX would be absolutely incredible at this point, and really scare the heck out of some bears, squeeze some people, get some people positive, and then crush them. So anyway, that's my thinking, but we shall see. The VIX, we closed above the 200-day moving average on Friday. Big hammer. We noted that it was outside the upper Bollinger Band, needed to go down or to the side to get back inside of it. That's exactly what happened. We did not get a downtick. We do not have a big green candle confirming the break of the 200-day moving average, and this is a possible reversal candle. Hammer followed by a inverse hammer. I like to call that it's not perfect, but a little yin-yang. But anyways, I just like the formation. Beyond that, 14-day RSI moving average still moving up. Stochastics trying to turn high. Down on the CCI, down on the RSI, up on the histogram, up on the MACD. It is mixed, but it is not like the Dow and SPX, where everything is pointing in a direction that we don't necessarily want to go at the moment. So this is encouraging, absolutely. And we still have negative divergence in the daily time frame that should be powerful. We have it in the RSI, the stochastics, and the MACD histogram. So is that going to mean anything? I sure hope so. And when it was up in the 27s today, I was just like, holy cow. I even put that in the daily running thread, but it did back away a good amount today, and that is also encouraging. 60-minute time frame. Do we have confirmation of a problem? Could the Dow and SPX go up tomorrow? Well, 14-day RSI moving average, 60-minute time frame, it's trying to curl. Stochastics are on their way down, CCI on the way down, RSI on the way down, histogram on the way down, MACD with a bearish cross. Yeah, this looks great in the 60-minute time frame for the bulls. Absolutely. ComQ, the NASDAQ. How about that? NASDAQ normally leads. And we peaked below, closed below the 200-day moving average, looking for confirmation. It was outside the lower Bollinger Band. It moved to the side. It moved up just the way it's supposed to, ending with a hammer possible reversal signal, and closing right at the 200-day moving average. Actually, right barely a little hair above. So how about that? If this is going to lead the Dow and SPX, hey, we know that we have some room to bounce. Now, we do have a lower low here today that should be retested at some point, at least attempted. We could bounce up here, turn around, come back, and then hopefully bounce off the 200-day moving average, making a failed double bottom, and then it just bounces away. That would be ideal. We shall see. Secondaries, same as the Dow, same as SPX, to the T. TNA, not as nice as the NASDAQ, certainly, ending with a hammer, possible reversal, right just a hair above the lower Bollinger Band, and everything ticking down with the exception of the RSI. We do have positive divergence in the MACD histogram, in the RSI, in the stochastics, and, well, way back here in the CCI as well. Does that mean it's going to mean something tomorrow? No, it doesn't, but at some point it'll matter. 60-minute time frame, TNA. Does this look bad? No. Histogram going up, MACD looking for a bullish cross, CCI trying to tick up, stochastics going up, 14-day RSI moving average losing momentum, attempting to start a roll up on the CCI. Not bad at all. And of course, lots of positive divergence all over the place. XOY, oil. Now this one is very nice. It did make a lower low, not good. It did end with a hammer, that is good. Got back inside the lower Bollinger Band, good. Kissed the lower price consensus level, backed away from it, but it did pierce it, good. We have no uptick, bad. Secondaries, not as bad as the down SPX. How about that? We do have a bearish cross on the MACD. We have the MACD histogram ticking down, stochastics moving down. Actually, it's stochastics mixed. 14-day RSI moving average down, but the RSI and the CCI are ticking up. And if we look at the 60-minute time frame, what do we have? We have a very positive chart. 14-day RSI moving average pointing up now. Stochastics up, CCI up, RSI up, histogram up, MACD with a bullish cross. Can we have further movement to the upside in the 60-minute time frame? Absolutely. UUP, the star of the show, the only one that really matters, and what we had pointed out in the daily running thread. And you know, I had looked at it like this on Friday, and I made a mistake. I looked at this and I said, oh, that doesn't look like a down tick. That is, that's just a side tick. Wrong. I didn't blow it up. It was a down tick on Friday. And it did give us a target. Target just shy of 2270. Very nice. And today, yeah, it was a great move to the downside. Not a candle of note, but we still have almost $1 to move to the downside just for a bubble corrective move. You can see we have the CCI down, the stochastics down, the RSI down, the MACD down finally, first day. Down on the MACD histogram, and the 14-day RSI moving average is still ticking up. Very nice. 60-minute time frame. Can we get more out of the Dow to the downside? We do have a down to target. And what do we have? Well, we have a negative divergence trying to work itself off right now. And so it should try to get right here to work it off properly. And what does that coincide with? Oh, that coincides with the downtick target. How about that? What a coincidence. And 14-day RSI moving average. Lots of room to move to the downside still. Stochastics pointing down. CCI going sideways at the end of the day. Down on the RSI. Slightly up on the MACD histogram and down on the MACD itself. Yeah, they're going to fight this. It's okay to have the MACD slanting up some. People are still afraid. People are still going to buy the dollar. All that matters is that we reach the downtick target and then let it do what it wants to do. But I really like this chart. Really like it. And if we happen to be able to break the bubble corrector move, continue going down, go down to the major price consensus level, which by that time will be a bar retest. We're looking at 22.5. Really, really good move. Really good move. That would be ideal for the expected bounce in the markets. And if it were to get, to the bubble corrected move or the bar retest, I would be quick to jump out, take profits, and reevaluate for the next move. But that's just me. And FXE, this one we did not miss. We had the uptick, noted it on Friday, and away it goes. It is trying. Wonderful. The only bad thing about this is now we have a double gap. Double gaps are not good, which would lead me to believe that bubble corrective move completed or not, at some point it's going to need to fill that, which would coincide nicely with a retest of the floor, which we have not retested yet. So that would be a natural move, and one of the reasons why I would be quick to jump out if a bar retest or a bubble corrective move happen, but that's just me. Positive divergence in the MACD histogram in the daily time frame should be powerful. MACD turning up finally. Matter of fact, this is a day one MACD tick up. Up on the RSI, up on the CCI, up on the stochastics, and the 14-day RSI moving average losing some momentum. If we can get a uptick on this, or even just going sideways, it'll be a really good indication. Oh, why not? 60-minute time frame, FXE. It's the euro. It's too important not to. You can see that we're going into the long-term moving average bar, 60-minute time frame. We have not emerged from the other side yet, but not far away. 14-day RSI moving average ticking up, stochastics mixed, down on the CCI, up on the RSI, slanting down on the MACD histogram, up on the MACD. It had a big move today. Hopefully it won't need a complete reset before it continues on the way up, but still not bad at all. GLD, yep. After its huge, amazing move, hanging man, inside hanging man. Not too bad. 14-day RSI moving average getting underway to the upside. Stochastics already high. Down on the CCI, up on the RSI, up on the MACD histogram, up on the MACD. Not too shabby. SLV, not as great a day on Friday. What does it look like today? Oh, it doesn't look as great today either, now does it? Hanging man. But everything essentially the same as gold. Not too shabby. Gold broke out of its range. Silver did not. We noted that on Friday, and it continues to stay there. Very close to the major price consensus level. So that's not a bad thing. XLF. The financials. Terrible today. Absolutely terrible today. Once again, below the lower Bollinger Band. We do have excessive separation in the short-term moving averages. We are a decent way away from the lower price consensus level. You could look at this and say, oh, well, we have a big red bar after breaking the 200-day moving average. Yes, we do. And that is a troubling sign. And everything ticking down with the exception of the RSI. What can you say? This is just a terrible chart. People will hate the banks at the moment, and yeah, they have less of a chance of fixing that in the near term. Apple, not a bad day, recovering so much, piercing the lower price consensus level, recovering. Middle Bollinger Band still below everything, that is positive. 14-day RSI moving average ticking up. Stochastics down, CCI down, RSI up, histogram down, MACD sideways. It could look a lot better. It could look a lot worse. So kind of touch and go with this one, but I really do hope that it's able to rebound here and take the markets with it. GE trying to get a better read on the Dow. Ooh. That is not what we wanted to see. At least it hasn't broken its 200-day moving average. Massively outside the lower Bollinger Band. This should go sideways or up to get back inside of it. And the secondaries look terrible. Even the RSI going sideways and not up. Everything else down, like down SPX. And I think that's about it. Yep. So some encouraging signs in an overall bad market. And I'll take that any day over a 100% bad signs in a bad market. As always, all investing decisions are your own. This chart and video are for entertainment, educational, and consumption of time purposes only. Thank you.